David, after weakening above that 750 mark against the dollar, the rand has recovered a little bit today. That really appears to be on the back of renewed dollar weakness, and we also had that gold price hitting new highs this morning.
Those are the exact factors that have brought the rand back down to 750. Gold is just simply on a charge, and it does seem like it wants to attack that $1,200 mark in the not too distant future. And we've also had a failure of the euro to reverse. It's been struggling to get through 150 on a sustainable basis, and traders booked some profits last week. But the gold price has pushed the euro stronger, the dollar weaker across the globe, and of course that's filtered into rand strength this morning.
Of course, we had the dollar strengthening almost to 148 against the euro at the end of last week. That was after Ben Bernanke also came out with comments on the strong dollar. But what do you think it's going to take to have a sustained break above 150 to the euro for the dollar?
Stephen, I think the fact that the U.S. authorities have really signalled that they're going to keep rates lower for longer. I think it's inevitable. It's a question of when the euro is going to break higher. The problem is that the longer it hovers around this 150 level, traders are going to be a bit reluctant to try and push it higher. We need a break of 150.65, and I think that would be the signal that we can move to 153 or 155, but we need to see that break above 150.65.
You said gold trying to get to that $1,200 an ounce mark. What would the implications of that be for the rand, do you think?
Well, I think the gold price is showing the uncertainty in financial markets at the moment, and that's really borne out by the fact that the U.S. yield curve is showing signs that traders are a little bit concerned about the growth prospects, and I think gold is benefiting from that. And I think the rand certainly will gain some momentum should the gold price push towards 1,200. And don't forget that platinum's also put in a very admirable run, and no doubt it will have positive benefits for the rand. The problem, of course, for the miners is that their costs are being pushed up by things like electricity. So from an equity perspective, it's not really that beneficial, but purely from a sentimental point of view, commodity currencies will benefit.
Mm-hmm. Well, what sort of performance has the rand been putting in against the other commodity currencies and also against the majors like the euro and sterling?
The rand has weakened over the last few sessions, and that's really on the back of some domestic concerns around the debate around the strong rand. That not only the Reserve Bank but the Treasury and the Department of Finance has been quite vocal about the strong rand. There's been a lot of concern about the talk about nationalisation of mines in South Africa, and so there are some domestic factors in the background that are putting the rand under pressure against the crosses.
Of course, we do have some key data out this week, as Alicia was alluding to earlier. We have the GDP numbers out tomorrow, inflation numbers on Wednesday and Thursday. What are you expecting on those fronts, and do you think they could be potentially rand moving?
Well, I think inflation should be said to come into that below 6%. Exactly how far it falls below that 6% in the next few months will determine interest rate policy going forward, and whether the Reserve Bank has scope to cut interest rates more. Should it fall quite heavily and interest rates do come lower, there's an argument that says, well, that might place the rand under pressure. As far as growth is concerned, I think we will follow the globe as far as recent data is concerned, showing that growth certainly has picked up across the world, and we do lag the global economy by a couple of months. So I think there would be no surprises if the domestic economy showed signs of growth. But really, it's the peripheral issues at the moment that are causing the movements on the currency front.
Mm-hmm. Of course, with those GDP figures, we also have the 5-yearly rebasing and benchmarking of the annual accounts by Stats SA and the SARB. I mean, could they result in the size of the economy being restated extensively?
Yeah, I think the last few months and the last sort of 18 months worth of movement on global markets certainly could cause a few surprises on that front, and I guess we'll just have to watch the data as it comes out.
Of course, we do have that Thanksgiving holiday on Thursday in the United States, half-day trading on Friday. So would you expect trade to really taper off as the week progresses?
Yeah, I think so, Stephen. I think we certainly in South Africa, we're firmly moving in towards that holiday period, characterized by thin markets, thin markets, rapid price movement, and really a lack of interest as far as investors are concerned. We put a piece out last week, depending on where one placed your money. If you bought rand in March, Whether you bought equities or simply left that money on deposit, you've benefited in returns to the tune of between 50 and 200%. So it's expected that some of those investors would book some of those profits as we move in towards the year end, and investor interest will wane simply as a consequence of the holiday period approaching us.
What do you think the implications of that will be for the rand, David?
I think the rand is firmly, it's an international, it's being driven by international factors at the moment, and we're still keeping a close eye on gold price and what the dollar is going to do, and those are the factors that are going to drive it. But I do expect movements to be choppy, a relatively thin market, and quite a bit of volatility about.